Wednesday, May 3rd, market analysis, Stan Ehrlich. Good morning, almost 10 o'clock California time. S&P 500, we always start out with stock market indexes as well. Then we go to futures, and we have a lot of stuff in futures today. In particular, we got some significant new developments, and they may reflect in the stock market indexes or change things. We do have an FOMC meeting in about an hour announcement, and that frequently makes the market move up and down some. But I'm a technician, not a fundamentalist. So let's see what I have to say here. We're between a rock and a hard spot. We gapped down yesterday. Gaps are almost always closed. So that gap above the market, and it's just above yesterday's high, a few points higher, should be closed soon. But will it market close the gaps below the market first? And in the spider, that's around 396.7 area. And on the daily data chart on the right, that little red zone right here. So eyeballing this, it looks like something in the order of a 50% retracement from the lows that we were made, that is on March 13th, not too long ago, the normal retracement. So I'm voting for the gap below the market to be filled first, a dip down of approximately 15 points, 97.12 is last from where we are, which might take a couple of days, maybe later this week, of course, or early next week, but it could happen very quickly also. If it does happen super fast, we have a good chance of getting oversold. And I'd love to see an oversold condition when we close that gap, if we close that gap. Again, it's around 396, 397, about where my cursor is. This will get a little red zone I've created for you in that gap zone area. And the gap was created when the market jumped up on March 29th, the day after March 29th. All right. Then we stopped going down, and it's not that far. Good buying opportunity. I hope, I expect, I think so. Let's see what happens when we get there. We also have the same kind of situation in the DIA and the Qs, and I'll show you in a moment. So if we can't close the gap below the market and we get some kind of bullish commentary in about an hour and the market loves it and it goes straight up, it's going to close that gap above the market. We probably won't get the gap below the market filled ever, and we'll perpetuate the 2023 bull market that started on October 13th with an green ER buy signal, profound, hugely important turning point. With my trading system, we pegged it to the exact day. In fact, we actually have all of our techniques getting in within that day and the day after. All right. So I'm very bullish, but do we close that gap about 15 points lower or not is basically the question. Let's go to the DIA. On the daily data charts on the DIA, we also have a gap below the market in the ballpark of 329. We're 337 momentarily, so it's 8 points or so lower. Resistance stopped the DIA from rallying a couple days ago, closing lower. That was Monday, and then dropping off quite a bit yesterday, but the close wasn't that bad. We are currently slightly higher, 34 cents. No big deal. And it's an inside trading range day, no higher or lower than the previous day's range. Basically an indication of uncertainty or lack of direction momentarily. So that's what we've got. It's kind of like the market hasn't opened and done anything yet. It's basically waiting for the FOMC announcement in about an hour, less 1 minute. Now, the Qs have, like the DIA and the S&P, a little bit of a gap. I'm sorry, wrong. The Qs do not have a gap. It's the Russell 2000 that also has the gap. But the Qs have an inside trading range day. They're mostly higher during this morning, and it's up 90 cents right now. Again, I think the direction, whether it's going to go up or down significantly enough to break out to the upside and perpetuate the long-term bull market for the year, and we're approaching half the year. I mean, this is the fourth month or fifth month of the year already. So I'm liking what I'm seeing. I'm long-term bullish. It's a question of coming down and closing the gaps. I'll show you the cues, daily data. And the gap is this little green zone that we tried to close only a few days ago, and it barely started to, and then all of a sudden it popped right back up again. At the same time, by the way, it was almost oversold. It would have been a little bit more idealistic if it could have closed the gap and gotten oversold properly and then turned back up for a big rally. That I would have loved. This was a very close call, but I didn't get any signals and I didn't turn bullish at the right moment. But I am basically bullish. I'm trying to pick these short-term moves up and down. A little tricky on occasion. So what about the futures market? I told you there's a whole bunch of new stuff developing today, and here we go. This is the spider, the E-mini, and of course the same commentary goes for it as opposed to the SPY, except that there are a little bit different signals sometimes on the E-mini because of the longer trading hours. As you can see, I did get 2 sell signals in the ES in the last month and a half or so, and the market has basically gone sideways since. So are those signals, which didn't work at the time, going to actually come true, and we're going to come down some amount, maybe a 50% retracement, like I mentioned before, from the lows that were made on the 13th of March. That does not change the overall long-term trend. It may provide a buying opportunity. Let's look at the next chart here. The bond futures are rallying toward a minor resistance level from only a week ago. The more important one is the 133, 134 area, which is not very much higher. And that is going to be very, very bullish when we start closing over it. And I think it's going to be relatively soon, maybe this month. But I do not expect it to last too much longer, this sideways trading process, before a major bullish breakout. And that should help the stock market continue to trend higher in general. Next chart is 10-year notes. Same commentary for the 10-year notes. I got a minor new high for 2 or 3 weeks and a minor new high close, but it's not above that blue line and those previous highs in the last couple of months. That's the major breakout. Next chart is crude oil. Now, the energy markets are doing something interesting this morning. Although crude is getting to be oversold and deserves a rally and is approaching another support area, the lows that were made in March. So I do think a little bit lower, it's going to start to bounce again. The more important point here is that a couple of weeks ago, it hit major resistance, did stop when it was overbought. And it turned down very nicely. And I talked about that at the time. It also had a gap to close, which it did, but that didn't allow the market to go back up and trend higher. It ignored the fact that the gap was closed, which I expected and talked about well in advance, and kept on going down yesterday and today, quite substantially so. So I think the trend is more cementing itself more bearishly long term, and we're going to make new lows for the whole many, many months soon. But oversold conditions provide bounces frequently, and when you're getting close to a support area like we are, the odds are a little higher that there'll be a bounce. But I'm saying very small, short-term, modest, before it goes into new low ground. Next chart is heating oil broke yesterday, one of 2 major support areas. And I changed that little red line to red for you yesterday while you watched. There used to be both green. We are now approaching the second green support area, the last significant support area for the last year, and we're oversold. Will that support area, which we almost touched, good enough, cause a bounce? Second day oversold. I'm thinking there's a very good chance of that. But the bounce could only be up to the red resistance level now of 2.3260, whatever the number is. That should be very close. And then down. Pretty much it's going down. It's a matter of how and when. Next chart. and it would be big time. And along with it, it comes the natural gas. It's another new low and a new low close. The trend is down, not very fast, but after it's gone sideways here for over a month, it could drop off pretty sharply, pretty quickly. We're not oversold yet, so there's elbow room to the downside on this. Looking for lower levels. Gold, silver, and platinum have become very interesting lately. We do have the possibility of a head and shoulder top in the gold market, although today it's starting to put a little dent in the formation and the bodywork, and we don't like that. So I don't really want to see any more time to the right. In other words, start going down right away. I don't want to see any more rally because it would begin to throw the symmetry of the pattern, which looked pretty good. And today it's got that little dent, but it could get worse if we go sideways too much or up too much. So there's not much choice. If it's going to work, it's going to start heading down real quick. That'll give you a low risk entry, and you could wait if you wanted to add or initiate a first position when it breaks the neckline. And the minimum downside objective on this head and shoulder top pattern, which is slightly damaged today, and I'm just eyeballing this real quick, would be around where the cursor is, about 1,900. Yeah, that's approximately correct. And it would take it about a month to 2 months at the most. Next chart is silver, and it looks like it could have a double top. I'm not getting any sell signals, unfortunately. But I do think this can, whoops, why is the RSI at the bottom not drawing? That's very strange. I'll have to figure that out. We have a little problem with that chart. But anyway, I like the fact that it's holding sideways. That double top needs to break. We need to go below 24.68 in order to have a bearish breakout. Otherwise, you got yourself a sideways trading range for the moment. Resistance above, support below is containing the tops and bottoms as it bobbles along for the moment. Next chart is platinum. And we had 2 days ago a major bearish engulfing. And today it is clearly a little bit above the new short sell signal red dots that I've drawn for you guys. So we sold relatively close to the high of the day today, or maybe at yesterday's high and close. I can't tell unless I zoom in. I think I missed it by a hair yesterday, but definitely not today. And so what we've got is a new short that is starting to make money right away. We all like that. New low, not yet, but a new low close looks plausible. And I'm liking what I'm seeing. I got no problem with this whatsoever. I would expect to see it move down to around 1,013. It's 1,059 at the moment. And it might be more serious than that. Look at the bigger picture. Way back in late December, early January, whatever that was, it was January 11th. We had a high and a bearish engulfing that we caught the top with. And the bottom all the way, also, by the way, we caught the bottom in all three of them, gold, silver, and platinum. Now, all three of them are exhibiting some sort of bearish developments in the technical side. I'm going to have to wait a little bit for this to clarify, but it looks like they are trying to top out in all three cases. Next chart, live cattle. The major bearish signal that we got a couple of weeks ago is now starting to kick in big time. But as I said before, the system would not have allowed that much of a move up, even though it made no new highs for the trend since the bearish engulfing, to maintain a short position. Unless you used a very slow, what we call a kicker, and it basically kicks the trailing STS, smart trailing stop along as a trend develops in your favor. Otherwise, it gets you out of the trade. And that initially is those yellow dots. But again, that made money in the first and second day that we were in the trade, or at least the first day. Yeah, first and second day. That'd be the day of the red and the day after. Now it's really starting to kick in big time. I think it's a little late to go short. Your risk is a little too large, but all's well and good so far. I'm bearish, and I'm expecting a move down maybe to 156, 155, 154 area. That looks very plausible. Next chart. High-grade copper. Probably going to bang into new low ground here. Another downside breakout. Buy signals are not providing very good results lately. And so oversold levels are being challenged again. This is all indicative of a market that's pretty weak and doesn't want to bounce back very much. Just a second. I want to check to see if I got bad data. Oh, I got a bad data point in there. So no change in commentary. There's just something I had to check. Okay, so next chart. Soybeans. We had a bullish engulfing buy signal that worked for a couple of days until yesterday's bearish engulfing, and I did mention I didn't like that. It's not the kind of thing I would normally see after a buy signal, and it did cause the market to break down and make a new low. We have a second lowest close for the trend down lately if we stay where we are, and we also have a new low. What can I say? The buy signal worked for a day or two, not much, and you either had a very small loss or a very small profit. Next chart is soybean oil. We got oversold. We bounced a little bit. There's a chance of it bouncing a little bit more, but I'm bearish. The trend is down. You've got lower highs and lower lows over time. And the only good buy signal we had was a whoppingly great one, December 12th. Next chart. Corn. If we can get above yesterday's high before the close, we will have a bullish green buy signal today. It'll be the low of the move down. After a week or so ago, we had a sell signal. The last couple of days have been oversold. We have a new low for the trend, and it is at a support level pretty darn accurately. 568 and a fraction. So will we be able to rally above yesterday's high and generate the green bullish buy signal? If so, it's a point blank buy signal. If not, and the market stays about where it is with the highs and the current quotes, we will have at least a potential double bottom in oversold conditions. So I'm looking for a rally. It's a low risk, long position, but I don't think it's going to go up that much. So maybe only a few days worth, and maybe to 6,210 at the most, something along those lines. So it's not really a big deal. If I get a bullish engulfing green, that's more important. That would be a double bottom with the buy signal on the second low, and I'm probably going to get 640 or higher. Next chart, wheat. Guess what we got today? Right now, we have a bullish engulfing green ER buy signal in wheat. The last time this happened, the market did go up for a few days, not a tremendous amount, and offered a good profitable trade for the ER1 right off the get-go. Never had a loss. The new long position on ER3 did get into the trade very, very accurately at the green dot and never had a losing, maybe a losing tick, potentially. If there was a losing tick, it was only a few, because we bought the lower extremely close to it, and it made some money for a couple of days. Now, what's going to happen with this one? We know we're already long just above the high of yesterday with the outside up day for ER1. It is, at the moment, profitable, but not much. So what we'd like to see is for it to hang on to what it's got, or maybe go up a little bit more in the next few days, to come back down, hopefully to that green dot, and then start to rally strongly. If we don't get the retracement to the green dot, well, we're in ER1 and already long. It's just a matter of whether you're going to get both strategies, ER1 and ER3, or just stay with the ER1. Next chart. Soybean meal, oversold again. Don't chase the market down. You may have some divergences. There is a divergence going on so far. That's a new low in price, but not a new low in the indicator you're following. That's called divergence. And it sets up potential significant buy signals or a divergence at the tops, sell signals. All right. Soybean meal, neutral to a bounce, but I'm bearish on the average, looking for lower levels. Next, hogs, outside down day, bearish engulfing, not an AR signal. So all I can say is price action is a little on the negative side. And what's the trend down? We probably saw the rally that we were looking for out of the green, bullish engulfing, and that's going to be it. We're now going to see this market challenge the lows of the trend and maybe even see lower lows. I do want to point out too early, then it's a couple of weeks from now, that if we don't drop off that much more, you've got a potential head and shoulder bottom. You get a downward slanted neckline available now, but the last shoulder has not formed. And since the formations are typically pretty symmetrical, you don't have the right timing and not quite low enough for the last shoulder low. So there's a chance of the bottom formation to develop, but don't jump the gun. It may not. Next chart. OJ. Okay, really don't care. Neutral to bullish, long-term trend. Kind of boring. Next. Going to go to, okay, Cocoa. Almost the same kind of comments here. Bull trend, looking for a buy signal, getting close to oversold, nothing yet. Next chart is sugar, and it did get very, very, very overbought for quite a very long time period. And so I'm not surprised we're seeing a good dip here, but it's not really that much. I'm thinking we could easily come down to 23 to 21. No signals though. Next chart is back to the E-mini, S&P 500, which is slightly higher on the day, up approximately $1, $1.50 ballpark. DIA right now 44 cents higher, and the Q's only up 90 cents. And I'll leave you with that. FOMC meeting in about 40 minutes or so. On your toes. Talk to you tomorrow.